Today's Finance 360-degree session. So today we are going to discuss two very important articles. Okay, so today we are going to discuss two very important articles that are released by the Reserve Bank of India. The first one is regarding the concentration risk management amendment directions regarding the urban cooperative banks, and the second news article is regarding the credit facilities of the urban cooperative banks. Okay, so these are the articles from your RBI News tab from the 6th to 30th April 2026, and the RBI has released both these notifications for the amendment in the urban cooperative banks directions. So there is the amendment regarding the concentration risk management, and there is the amendment regarding the credit facilities. Very important data has been provided by the Reserve Bank of India just before your examination. So this data becomes very important that we are going to discuss in today's session. So give me a thumbs up if I'm clearly audible and everything is fine. Good morning, Kashish. Good morning, everyone. So this is your Reserve Bank of India Urban Cooperative Banks Concentration Risk Management Amendment Directions 2026. First, we are going to start with the Urban Cooperative Banks Concentration Risk Management Amendment Directions. Now, concentration risk is what? Concentration risk is what? Okay, so voice is fine now. See, concentration risk is when a bank is lending a lot of money to a single borrower or a group of borrowers. So when there is too much lending or when there is too much loans that are given to a single borrower, so bank becomes exposed to this single borrower. Or let's say group entities that 100 crores are given to the Geo Financial Services, 50 crores it is given to the Reliance Power, 50 crores it is given to the Reliance, other Reliance Industries and such. So you can understand that in total 200 crores is given to the Reliance group. So this is the group, like the bank is lending a lot to the group entities that belong to the same group. Okay, so the bank concentration risk basically means that when a bank is giving too much loan to a single borrower or a group of borrowers, the group entities, so concentration should not be happening. There should be diversification. Diversification means that the bank should be lending to different entities so that the risk is diversified and the risk is spread out. So Reserve Bank of India brought Urban Cooperative Banks Concentration Risk Management Directions 2025, where the limits were provided for the single borrower, for the group entities, that these are the limits on the concentration. Okay, that can happen, that how much loan can be given to the single entities or the group entities, to the single borrowers, to the group entities, how much can be lent out, what is the maximum percentage that can be lent out. Okay, so the Reserve Bank of India brought Urban Cooperative Banks Concentration Risk Management Directions 2025 to limit the concentration risk of the urban cooperative banks by setting the prudential exposure norms, by setting the limits on the exposure that the urban cooperative banks can have to the single borrowers or to the group entities, ensuring safer, more diversified lending and investment portfolios. So I hope the idea of this direction is clear, that in 2025 these directions were brought. Now the RBI issued the Urban Cooperative Bank Concentration Risk Management Amendment Directions, where certain amendments have been brought that we are going to discuss. Now these amendments shall come into force from October 1, 2026 or an earlier date when adopted by the UCB, Urban Cooperative Bank. But by maximum, the urban cooperative banks have to adopt these amendments by October 1, 2026. Now, key highlights of the amendment directions. What are the amendment directions? First of all, unsecured advances. What are unsecured advances? That are not secured by some collateral, right? That are the unsecured advances. Let me also open the explanation page. So basically, unsecured advances or unsecured loans. See, secured loans, they are the loans that are backed by gold. The bank has taken gold as collateral, as a security, or your property as the security, or let's say the bank has taken the shares or the financial instruments that you have as the security, or some deposits of yours as the security. Okay, so when the bank is taking the collateral, it provides the security to the bank that okay, if you default, the bank can sell the gold or the property or the shares to retrieve the money. Okay, so this is the idea that there are the secured loans, there are the secured advances that are backed by the collateral, but there are the unsecured advances. What are the unsecured advances, or which advances or which loans will be treated as unsecured advances by the urban cooperative bank? So clean overdrafts. I hope you have heard about the overdrafts. Let's say you have 10,000 rupees in your bank account, but you are taking out 1 lakh rupees. So what is the overdraft that you have got? What is the extra money that you have got from the bank? The extra money that you have got from the bank is 90,000. That is a kind of loan that you have taken from the bank for a short period of time. So overdraft basically means that you can take out more money from your bank account than what is available in the bank account. Okay, so there are overdraft limits that the bank set on the basis of how much deposits you have done, on the basis of your past history with the bank allocates some overdraft facility to the customers. Okay, maybe 2 lakh is your limit, or maybe 1 lakh is the limit, or 50,000 can be the limit, that okay, this much of the overdraft you can do. Now what is clean overdraft? Clean overdraft means, clean here means that is not backed by any collateral. Clean means because of your credit history, because of your credit worthiness, as well as just on the basis of the trust, the bank is providing you this overdraft. So clean means it is not backed by any collateral, it is not backed by any security, just on the basis of the credit history, the bank history and the trust. The bank is giving you this overdraft. Okay, so that is the clean overdraft. Loans against personal guarantee. Now personal guarantee, let's say Kashish is taking loan. Let's say Kashish is taking loan of 1 crore and or let's say 10 lakh rupees. Kashish is taking loan of 10 lakh rupees and Kritika, that is me, have provided the guarantee that if Kashish defaults, then I will pay. But what if I also default? So that's why loans against personal guarantee, they are also considered unsecured advances because there is no physical collateral that is present. And what if the other person also defaults? Clean bill discounts, bill discounted, have you heard about it? Still, bill discounting basically means, let's say micro, small and medium enterprises or the sellers, they are selling the product. Okay, they are selling the product and they have sold tables worth 1 lakh rupees. Now the buyer is the government department. Now the government department is saying that they will be able to pay after 3 months. They cannot pay immediately, they will be able to pay after 3 months. So the buyer is basically saying that they cannot pay immediately, they will be able to pay after 3 months. The seller do not want to lose the business, and that's why seller is making a bill invoice that the seller has delivered the products, and after 3 months on, let's say August 9th August 2026, the seller will pay the amount. Now the MSME requires the money right now, so MSME will go to the bank. MSME will go to the bank, will provide this bill invoice to the bank. The bank will say that okay, the government department is the trusted source, so yes, the bank will be able to retrieve the money from the buyer after 3 months. So bank will give the MSME, let's say 90,000 rupees. The bill is of 1 lakh rupees. So the bank is taking the discount of 10%. The discounted rate is 10%. So that is 10% of 1 lakh is 10,000. So after deducting the 10,000, 90,000 is given to the MSME. 10,000 is basically the profit of the bank, we can say. Okay. So after 3 months, the bank will retrieve 1 lakh from the buyer. So in this way, what has happened that the MSME has got the immediate funds. The MSME has got the immediate funds, though it was able to get 90,000. But the MSME thought that okay, this is fine, this is still profitable for the MSME. That's why it continued with the business, and that's why it continued with this. Okay, the bank is able to get 1 lakh rupees after 3 months. So for waiting for 3 months, the bank got the profit of 10,000 rupees as well as for taking the risk. Now the buyer can be any other buyer also. It can be some corporate entity also. The buyer can be some corporate entity also. Now on the basis of the risk profile of the corporate entity, let's say it has the good rating, it has a good credit score or good credit rating, okay, that's why the bank is also taking the bill invoices for this kind of buyer, because this is a corporate entity, that is a trusted corporate entity, okay. So this is the idea, these are the bills discounted. Now the bank is taking the bill. Now the bank is buying this bill invoice worth 1 lakh rupees. Can the buyer default? This corporate entity or some entity, even if it had the good credit rating previously, but is there some risk involved? Yes or no? Yes or no? The buyer can default after 3 months. Maybe the buyer is saying, specially like the government department cannot say no, but the corporate entity can say no, that okay, we are not able to return the money to the bank, or we are not able to pay. So this might happen. So that's why clean means it is not backed by any collateral, just there is a bill that is involved, that's it. Okay, and if the buyer defaults, the bank will be losing the money. Checks purchased. Now in this case, what happened, that let's say you have a check worth 1 crore rupees. Let's say you sold your property, and you got this check of 1 crore rupees. Okay, now this check will pass on, or this check will clear, let's say in 3 days. It is going to take 2 to 3 days. Now you cannot wait for 2 to 3 days for the check to clear, because you need the money right now. You will go to the bank, you will say that okay, I'm giving you this check of 1 crore rupees, and give me right now, give me 95 lakh rupees or 99 lakh rupees. So the bank just have to wait for 2 to 3 days, and bank will be making the profit of 1 lakh rupees, because bank gave 99 lakh while the bank will be getting 1 crore from the check. So the bank waiting for 2 to 3 days can make the profit of 1 lakh. So bank will take the risk. But what if this check bounces? That's why this is also unsecured advance, because the checks purchased by the urban cooperative bank or the check purchased by the bank, what if it get bounced? Okay, draws allowed against checks. Let's say you sold your property, you got a check worth 1 crore rupees. Okay, you sold your property, you got the check worth 1 crore rupees. Now you need 10 lakh rupees immediately. So you will go to the bank and you will say that okay, this is the check, and I'm keeping the check with you, but I need the 10 lakh rupees immediately. Okay, I need the 10 lakh rupees immediately. Like after 2 to 3 days, this check will clear. Now the bank can give the 10 lakh rupees and can take a fee. The bank can take, let's say, 10,000 rupees as fee or something. This is known as the draws allowed against checks. Draws means part of the money that can be taken against the check sent for collection shall be treated. This will be also treated as unsecured money, because the banks have given the 10 lakh rupees. What if this check bounces? So I hope this is all clear, that these all are considered the unsecured advances. The clean overdrafts, loan against the personal guarantee, clean bill discounted, or the checks purchased, draws allowed against the checks. All of this is unsecured advances, because they are not backed by any physical collateral. Advances granted to salaried employees. Now this is a exception case, so hear it very carefully, that if advances are given, if the loans are given to salaried employees against personal guarantee, salaried employees, they have not given any collateral, so there is a personal guarantee that is involved, they may be treated as secured advances only if the urban cooperative bank has a legally enforceable agreement with the borrower and the employer of the borrower for deduction of periodic loan installments from salary or wages. So basically what this is saying is, let's say Varun is the borrower, okay, and Ronak is the lender, and the Varun is working in XYZ company. Now the lender, there is a legally enforceable agreement that the lender will get the EMIs from the salary of Varun, and at the time, like the company itself will deduct the amount from the salary before giving it to Varun. So this is the basic idea, that let's say Varun has a personal guarantee. has a personal guarantee, he doesn't have any collateral to provide to take the loan. Okay, so the advances are given to Varun, that is a salaried employee, against personal guarantee. This may be treated as secured advances if the urban cooperative bank has a legally enforceable agreement with the borrower and the employer, that is the XYZ company, for the deduction of periodic loan installment directly from the salary from the employer side. Okay, so this is the idea. Advances against receivables, that is bills, invoices, bill invoices. So advances against bill invoices or receivables, that is basically when some products are going to be received. Okay, shall be treated as secured advances only if such receivables originally have a tenure of not more than 180 days. Any confusion, anyone? Any confusion? Clear? So this is the idea that, see, unsecured advances, all of these are considered the unsecured advances. Okay, bill discounted or the clean overdrafts and withdrawals allowed against the check and such. But in the case of the salaried employees, if the employer is agreeing, then this can be considered secured advances, as well as in case of receivables also, that there are some bills related to the goods and services. If they are originally having a tenure of not more than 180 days, then they can also be considered secured advances. Okay, now exposure norms. So the aggregate unsecured loans and advances, the total unsecured loans and advances that can be provided by a urban cooperative bank shall not exceed 20% of its total loans and advances. So out of the total loans and advances that a urban cooperative bank is providing, total 20% only can be unsecured loans and advances. Okay, so the aggregate, the total unsecured loans and advances, that are provided by a urban cooperative bank shall not exceed 20% of its total loans and advances as per the audited balance sheet as on March 31st of the preceding financial year. Okay, so this is the basic idea. If a UCB meets the eligibility criteria for business authorization, now this is the eligibility criteria for the business authorization. That is, see, a bank will be considered as fully complying with the eligibility criteria of the business authorization if the bank is meeting these conditions. The CRAR, that is the capital adequacy ratio, the adequate capital that the bank has, the capital adequacy ratio or capital to risk weighted asset ratio, that is known as capital adequacy ratio basically. So the bank has sufficient CRAR, the bank has sufficient capital adequacy, and the CRAR should be at least 1% above the minimum CRAR of 9%. Okay, the minimum CRAR of 9% or whatever percentage is applicable for the urban cooperative banks, because the urban cooperative banks are in different tiers, so different CRAR can be applicable for the urban cooperative banks, but the CRAR should be at least, if the bank is under the eligibility criteria for business authorization, that means the bank has 1% above the minimum CRAR. Okay, net NPAs of not more than 3%. So net non-performing asset should not be more than 3%. Okay, net profits during the preceding 2 financial years, so there should be net profit during the preceding 2 financial years. No default in the maintenance of CRR, that is cash reserve ratio, SLR, that is the statutory reserve liquidity ratio. So the ratios should be maintained in the preceding and the current financial year. So core banking solution fully implemented and such and such. So that means this is a healthy urban cooperative bank that is maintaining the minimum CRAR and 1% higher than the minimum CRAR, having the net profit in the previous 2 financial years, and the net NPAs is not more than 3%. So this is a healthy urban cooperative bank. So if we have a healthy urban cooperative bank, then unsecured loans up to 50,000 per borrower that qualify as priority sector loans will be excluded. So priority sector loans are the loans that are provided to the priority sectors such as agriculture, micro, small and medium enterprises, export, education, housing, renewable energy, social infrastructure. So these are the priority sectors. So basically, here it is said that the exposure norms, just a second, let me clean this a little. So basically, actually, the aggregate unsecured loans and advances that a urban cooperative bank can provide shall not exceed 20% of its total loans and advances as per the audited balance sheet as on March 31st of the preceding year. So preceding financial year, the audited balance sheet, whatever was the total loans and advances of that, 20% only, maximum 20% only can be provided as the unsecured loans and advances, not more than that. So a very small chunk of the total loans and advances, a very small part should go for the unsecured. Okay? If a urban cooperative bank is meeting the eligibility criteria for business authorization, that means it is a healthy urban cooperative bank, then the unsecured loans up to 50,000 per borrower that are under the priority sector loans, they will be excluded and will not be counted while computing this 20% ceiling on the total unsecured loans and advances. I hope this is very much clear that if the urban cooperative banks are the healthy urban cooperative banks that are fulfilling the eligibility criteria, then the unsecured loans that are provided up to 50,000 per borrower that qualify as the priority sector loans, they will be excluded from this 20% calculation. Okay? Yes. Now, coming to this revision part. So basically, which loans are treated as unsecured loans? Clean overdrafts, loans against the personal guarantee, clean bills purchased or discounted, checks purchased, drawals against the check sent for collection. Exception treated as secured. So exception is legally enforceable agreement between the borrower and the employer and with the lender that the money will be deducted from the salary or the wages. Salary deduction mechanism for installments, that is, money will be deducted from the salary. Okay. Next is advances against receivables treated as secured only if the original tenure is up to 180 days only. Next is exposure norms. So general limit is that the unsecured loans can be given up to 20%. It should not exceed 20% of the total loans and advances as per the audited balance sheet of the previous financial year by 31st March. Now, exclusion from 20% ceiling, the urban cooperative banks that are meeting the branch authorization directions 2025, they are fulfilling the eligibility criteria, so they can provide loans up to 50,000 per borrower if they qualify as the priority sector loans, so they will not be included in this 20% ceiling. Okay. Now, coming to the next part, any confusion till now? Ceiling on unsecured advances. Any confusion, anyone? See, ceiling on unsecured advances. So earlier, salary earner UCBs, salary earner urban cooperative banks, they provide the loans. They provide the loans to salaried employees of a particular institution or group of institutions. Okay, so salary earner urban cooperative banks, they are a category of urban cooperative banks that only provide the loans to salaried employees of a particular institution or group of institutions to which its membership is restricted. Now, urban cooperative banks, they are what? They are cooperative banks. So they can lend to their own members. They should be lending to their own members. They should be lending to their own members means that if you want to borrow the money from the urban cooperative bank or from a cooperative bank, you need to buy certain shares of this urban cooperative bank, certain minimum shares of this urban cooperative bank. So you need to be a member of the urban cooperative bank. Why this kind of process is required? So that the borrower that is going to borrow from the urban cooperative bank, buying the shares of the urban cooperative bank, will have some interest in the working of the urban cooperative bank also. If the borrower do not return the money, basically the urban cooperative bank can fail and the shares will plummet. So borrower will also face losses. So basically, under the urban cooperative banks or under any category of the cooperative banks, the idea is that loans should be provided to the members. Okay, and members are those that are invested in the urban cooperative bank, that have invested in the cooperative bank. Okay, so this is the idea. Now in the salary earner urban cooperative bank, the loans are provided to the salaried employees of a particular institution or group of institutions to which its membership is restricted, and deductions are made from the salaries through their employers. That means there is a legally enforceable agreement that if the employee is taking a loan, so the money will be deducted directly from the salary or the wages. Okay, so deductions are made from the salaries through their employers. The salary earners UCB allowed such advances in excess of the limits. Okay, so in this case where the salary earner UCB is providing the loan to the salaried employees, and these salaried employees of a particular institution or a group of institution which are member of the UCBs. Okay, now these salaried employees, they have there is a contract or there is an agreement that the EMIs will be deducted directly from their salary or wages. So this kind of contract is available with the employer also. Okay, so in this case, in the salary earner UCBs, the UCBs can give the loan to the salaried employees of a particular institution or group of institutions which are member of these urban cooperative banks. Now, the salaried employees that are given the loans, from their salary or wages directly the EMI will be deducted. This kind of contract or agreement is there with the employer with the employee. Okay, this is the idea. Now, in this case, the advances can be given, loans can be given in excess to the limits. What are the limits? First of all, the limits range from 0.25 lakh to 5 lakh. So this is the range of the limits. These are the limits, and the salaried earner urban cooperative banks, the salary earner urban cooperative banks, they can give excess loans than the limits also. Okay, but now the RBI has removed the earlier fixed range of 0.25 lakh to 5 lakh per borrower for the salary earner UCBs. So this kind of limit of 0.25 lakh to 5 lakh, this has been removed for the loans, and instead there are the new limits that have been identified. Okay, so these are the limits for the individual borrower and limits for the group borrowers that are taking loan from the salary earner urban cooperative banks. So basically the criteria is that the urban cooperative banks having a CRAR equal to or more than 9%. So see, the salary earner urban cooperative banks, they come under the tier 1. That is the lowest tier of the urban cooperative banks. So urban cooperative banks are divided into 4 tiers: tier 1, tier 2, tier 3, tier 4. Okay, we will discuss about the different tiers, but basically tier 1 UCBs are the smallest of the UCBs. They are the unit UCBs. Unit UCBs means that the urban cooperative banks that are only present in a particular place or in a particular district only. They do not have branches in other states, in other cities, in other districts. So unit UCBs means one unit only, that is they are present in one district or one area only. Tier 1 UCBs, they are also the salary earner UCBs. They can only provide the loan to the salaried employees of particular institutions or group of institutions. Okay, as well as tier 1 UCBs also consist of the urban cooperative banks that have the deposit size of up to 100 crores. Okay, so then we will discuss about tier 2, tier 3 and tier 4 also. But basically the salary earner UCBs come under tier 1 and they need to maintain a CRAR of 9%. The higher you go, the more the CRAR you have to maintain, but the capital adequacy requirement for the tier 1 UCBs is 9%. So here we are talking about particularly the salary earner UCBs that come under the tier 1. So for the salary earner urban cooperative banks, before the limits were in between 0.25 lakh to 5 lakh. But now it has been said that on the basis of the CRAR, on the basis of the demand and time liabilities. Now demand and time liabilities, liability of a bank is what? Liability of a bank is the deposit that the bank is taking, because the deposits are the liability. It is the obligation of the bank to return the deposits. So demand deposits, like in your savings account, you can withdraw this money whenever you want. Time deposits are your fixed deposits. Let's say your recurring deposit that is with the bank for a time period. So these are the demand and time deposits, that are the demand and time liabilities. This is the liability of the bank. Okay. So if the urban cooperative bank has the demand and time liability, demand and time deposit up to 10 crore, and the CRAR is 9% or more than 9%, then 1 lakh per borrower or per group borrower. Okay. If the urban cooperative bank has the demand and time liability of above 10 crore and up to 50 crore, so 2 lakh, and CRAR is 9% or more than that. Urban cooperative banks have the demand and time liability above 50 crore and up to 100 crore, so 3 lakh. Urban cooperative banks with demand and time liability above 100 crore, so 5 lakh is the limit for individual borrower and group borrower. Now, if the urban cooperative banks have CRAR of less than 9%, in this case, urban cooperative banks with demand and time liability up to 10 crore, 0.25 lakh can be given. This is the limit for the individual borrower or group borrower, and as you proceed ahead, the limit increases to 2 lakh. Any confusion here, first of all? So basically, in the tier 1, tier 1 UCBs are those UCBs, those urban cooperative banks that are the unit UCBs that are only present in one district, one place. The salary earner UCBs also come under the tier 1, as well as the UCBs that have the deposit size up to 100 crores. They also come under the tier 1 UCBs. Okay. So this is the idea. And for the salary earner UCBs, there are the limits on how much the loan can be provided for the individual borrower and group borrower, and the limits have been laid down here on the basis of the CRAR requirement, that the capital adequacy requirement is being met or not, the bank has enough capital or not, as well as on the basis of the demand and time liabilities, that is the demand and time deposits. On the basis of the deposits, the limits have been determined. Okay. So for the unsecured, now we are talking about unsecured advances here. So before, for the unsecured advances, the limit was ranging from 0.25 lakh to 5 lakh, but there was no set criteria as such, and now the set criteria has been provided. The slab wise limits on unsecured advances have been provided to the salary earner UCB. Okay. Now coming to the ceiling on advances to nominal members. So let me just show you here. So here you can see that earlier provision was that salary earner UCBs, they were allowed unsecured loans beyond limits also. But first of all, fixed limit was 0.25 lakh to 5 lakh per borrower. And beyond this limit also, the loans can be provided. The unsecured loans can be provided, but this was the basic limit. Now the new provision is that rather than having a fixed range, this has been removed. Now there is the demand and time liabilities and the capital adequacy on basis of which the urban cooperative banks can provide the unsecured loan. So if the CRAR is more than or equal to 9%, on the basis of the demand and time liabilities, the loans can be provided to a single borrower or group borrower. Okay, similarly. So before there was a fixed range, but now what has been decided that there is the slab wise unsecured loans limit that has been determined. Before there was a range, now there is the slab wise clarity. Slab wise clarity is provided that how much unsecured loan can be given to a borrower if there are certain conditions that are being met by the urban cooperative bank. Chalo, moving ahead with the nominal member. Nominal member is the member. See, as I've told you that the urban cooperative banks, they can provide the loans, or the cooperative banks basically, they can provide the loans to their members only, to their members basically. Okay, otherwise they will have to follow the different rules and regulations, but the urban cooperative banks, they can provide the loans to their members. Now, who is a nominal member? Nominal member is a member who is member of the urban cooperative bank in name only, So nominal member includes a person who is a co-partner. Co-partner means member of a Hindu undivided family who acquires a legal right to ancestral property by birth, spanning up to 4 generations and such. So co-partner is nothing else, it is a member of a Hindu undivided family. So nominal member includes a person who is a co-partner, wants to stand surety for a borrowing member of the bank. Okay, or wants to avail permitted credit facilities occasionally for a temporary period not exceeding 3 years. So basically a nominal member can be co-partner who is a guarantor, who is working as a surety, who is providing the personal guarantee for a borrowing member of the bank, or the nominal member can be a nominal member who wants to have a temporary loan of up to 3 years time period. Such persons may be enrolled as a nominal member upon application and giving a non-refundable entrance fee. So these nominal members, they are not like the regular members. Nominal members, they do not have to purchase the shares, they do not have to invest in the shares, but they have to pay a non-refundable entrance fee because they are not purchasing the shares of the Urban Cooperative Bank. That's why they are also limited on their access of loans from the Urban Cooperative Bank. They can access temporary loans for only a period up to 3 years, okay, or they can act as a guarantor only. So such person may be enrolled as a nominal member by providing the application or on the payment and paying the non-refundable entrance fee, provided that such person must also reside or be gainfully engaged in any occupation within the area of operation of the bank. That means the Urban Cooperative Bank, it is working in a particular district, so the person that is the nominal member should also be present in that district or having a job in that district. Okay, a cooperative society registered under any law cannot become a nominal member. So remember this, that a cooperative society cannot become a nominal member. Further, a nominal member will not be entitled to receive a share certificate because they have not purchased the shares, audited accounts, annual report, dividend from the Urban Cooperative Bank. So the regular members of the Urban Cooperative Bank, because they have invested in the shares, so they also get the share certificate, audited accounts, annual report, dividend from the Urban Cooperative Bank, because the nominal member has only given a non-refundable fee, so they have not purchased the shares, so they will not be entitled to anything like this. The nominal member will also not have the right to attend, participate or vote in the general meeting or special general meeting of the bank. So Urban Cooperative Bank can give loans to nominal members only if its bylaws, that is the laws basically related to the Urban Cooperative Bank, is aligned with the State Cooperative Societies Act, specifically allow lending to nominal members. That means the rules and regulations under which the Urban Cooperative Bank was created, so the bylaws of the Urban Cooperative Bank basically has the norms to allow the lending to the nominal members, then only a Urban Cooperative Bank can lend to nominal members. If above condition is met, that there is a nominal member and the Urban Cooperative Bank has the bylaws according to which it can provide the loan to the nominal member, so if above condition is met, the Urban Cooperative Bank may grant loans for purchase of consumer durables subject to maximum of 2.5 lakh per borrower. You want to buy sofa and fridge, or you want to buy some mobile phone. So if you want to buy consumer durables, the maximum loan that you can get from the Urban Cooperative Bank being a nominal member is 2.5 lakh per borrower. Loans against deposits, gold, silver ornaments, life insurance policies and government securities can also be provided, but only within limits set by the board approved policy. So Urban Cooperative Bank is allowed to let its existing loans continue and run till their maturity date so that the transition is smooth. So basically it is said that before adopting, like from October 1, 2026, the new norms have to be followed. But let's say there are the loans that were given before this time period for, let's say, 2 years, 3 years. Okay, so the loans that have already been given, for that the amended directions will not work. Okay, so Urban Cooperative Bank is allowed to let its existing loans which do not comply with the new amended directions continue and run their maturity. But if the new loans are given, okay, but however, after the amendment becomes effective from 1st October 2026, the Urban Cooperative Bank must not renew, review or roll over or increase the timeline of the loans that are not following the amended directions. So the earlier loans that have already been provided, they can continue without following the amended directions, but they cannot be renewed, they cannot be reviewed, or they cannot be rolled over after October 1, 2026. This is the basic idea. Okay, so here we have discussed that for the salary earner UCBs, these are certain limits that we have discussed. Who is nominal member? Co-partner, that is a member of Hindu undivided family, person acting, this is the person acting as a surety, or if the person availing temporary credit, so they are the nominal member. Okay, conditions: must reside or work within the bank's area of operation. If the bank is working in a particular district, so this person should also be present in that district or work in that district. Exclusion: cooperative societies cannot be nominal members. Okay, so nominal members can be a co-partner can be a nominal member, that is member of a Hindu undivided family. So a Co-partner can be a nominal member. If a person wants to become the surety or the guarantor, it can become a nominal member, or a person who wants to get the loan from the urban cooperative bank for a time not exceeding 3 years, it can also become the nominal member. Okay. Restrictions: nominal members, they do not get any share certificate, audited accounts and such. They do not have any voting rights also. Lending conditions: they can get the loan but up to 3 years only, and allowed only if the UCBs can give such kind of loans to the nominal members only if their laws permit. Okay. Permitted loans: consumer durables up to the limit of 2.5 lakh per borrower, and loans against the other instruments is also allowed. Okay. Now the first direction regarding the concentration risk management is completed. Now we are moving forward with the credit facilities. Any confusion in the above direction? Any confusion here? Any confusion? See, earlier the salary earner UCB grant advances to salaried employees of a particular institution, group of institutions. So salary earner UCBs, they can provide the loans to salaried employees of a particular institution or group of institution, and the limits range from 0.25 lakh to 5 lakh. Now RBI has removed the earlier fixed range of 0.25 lakh to 5 lakh, and this has been exchanged with the slab wise limits. So for the salary earner UCBs that are granting the advances to salaried employees of a particular institution and such, so for the salary earner UCBs, before the range has now been converted into slab wise limits, and these slab wise limits are being determined on the basis of the demand and time liabilities, that is the deposits of the urban cooperative bank and the capital adequacy ratio of the urban cooperative bank. This is important. Last year, let me show you the question that has come in the phase 1. See, this whole table was given in the phase 1. This whole table was given in the phase 1 in a question, and it was said to match. Okay. So similarly, see, in the case of urban cooperative banks, this is important because both directions are the amendment directions. Both are leading to certain amendments. So yes, these both directions are important. Yes, you have to remember it. Remember that 10 crore, then 10 to 50, then 50 to 100 and above 100. Okay. So 1, 2, 3 and then 5. 0.25, 0.5, 1. So double. Okay. Double. Then just increasing like that. Here in the lower level, you can just remember that we are doubling it. 0.25, 0.5, 1, 2. In the above one, just you are increasing 1, 1, 1 and then 2. So in this way, try to remember. Okay. Now coming to this part, Reserve Bank of India Urban Cooperative Banks Credit Facilities Amendment Direction 2026. So primary objective of the Reserve Bank of India is to regulate. So RBI has released the directions for the credit facilities to regulate and to guide the credit system operated by the urban cooperative banks, so that the credit system of the urban cooperative banks can work in a structured and efficient manner. The RBI has now brought an amendment to the urban cooperative bank credit facilities amendment direction. Okay, so amendment has been brought in the credit facilities directions to refine the existing credit framework of the urban cooperative banks. So basically, the amendment shall come into force from October 1, 2026. So here, first of all, let's understand about the tier 1, tier 2, tier 3 and tier 4. So tier 1 UCBs are all unit UCBs that have only one they are only present in one district. They do not have any other branches. Salary earner UCBs, irrespective of the deposit size, and all other UCBs having deposits up to 100 crore, they come under tier 1. Tier 2 UCBs are the slightly bigger UCBs that have the deposits of more than 100 crores and up to 1000 crores. Tier 3 UCBs are further bigger UCBs with deposits of more than 1000 crore and up to 10,000 crore. And tier 4 UCBs, they have the deposits of more than 10,000 crores. Okay, so they are the biggest UCBs. So now see, for tier 1 and tier 2 UCBs, a housing loan can be provided for up to 20 years in total. If there is any moratorium period that is provided, that should also be included in this 20 years time period. Moratorium period is the no repayment period. That means in this moratorium period, there is no EMI that is paid. Think about it that during the COVID-19, for various loans, moratorium period were given, that because during the COVID lockdowns were happening, the businesses, the people, they were not able to repay the loan at that time period. So it was said that during the COVID-19, like for 6 months, for certain time period, the EMIs do not have to be paid. Okay, so this is the moratorium period, that is no repayment period. So tier 1 and tier 2 UCBs, they can provide a housing loan which can run up to 20 years in total, including any moratorium period that is also given. So bank can give a moratorium only till the house is being built. But if the house is being built for 10 years, can the moratorium be given for 10 years? Or if the house is being built for 20 years, that we are still building the house? No, the moratorium period cannot go beyond 24 months from the first loan disbursement. So let's say the loan has been given in 2026, so maximum moratorium can be given up to 2028 only, that is for 24 months only. Okay, even if the construction is not complete, that doesn't matter, the moratorium can be given maximum up to 24 months only. Tier 3 and tier 4 UCBs can decide their own tenure of housing loans, as well as including the moratorium period also, because they are the big UCBs. They can take these kind of decisions on the basis of the board approved policy. Moratorium may be allowed only in cases of housing loans extended for under construction houses. That means moratorium period cannot be allowed in loans for acquisition of completed houses. Moratorium can only be given till the house is being built or for like during the construction phase. But if the house is already built, then there should be no moratorium period that is given. Now, tier 1 UCBs can give maximum 60 lakh rupees for per dwelling for one house basically. Tier 2 can give maximum 1.40 crore. Tier 3 can give maximum 2 crore. Tier 4 can give maximum 3 crore for per house, for per borrower, we can say. Okay, this is the idea. Now, credit facilities against deposits. Any confusion? A UCB must have a board approved policy for giving loans against deposits, and this policy should clearly state the margin that must be maintained for such loans. That means a urban cooperative bank, on the basis of the board approved policy, can give the loan against the deposit. Let's say you have a deposit of 1 crore rupees, so the loan can be given up to 50 lakh, or if you want to take a loan because you do not want to finish your fixed deposit, you do not want to cancel your fixed deposit, you do not want to take out the money from the fixed deposit. So let's say rather than closing your fixed deposit and facing the lesser interest rate and such, you are taking the loan because you need the money. So rather than breaking your fixed deposit, you have taken the loan of 50 lakhs against this fixed deposit. Okay, so this is the idea, that the urban cooperative bank can provide the loan against the deposits, and this policy should clearly state the margin. Margin means that 10% less or 20% less, what will be the margin? If the deposits are of 1 crore, how much loan can be given at the discount of 10%, at the margin of 10%, 20%, 30%. If the margin is 30%, that means loan can be given 70 lakhs only. Okay, so margin has to be decided on the basis of the board approved policy. Okay, also a urban cooperative bank is not allowed to give any credit facility against fixed deposit or term deposit receipts of other banks. Okay, so urban cooperative bank must have a board approved policy for giving loans against deposits, and this policy should clearly state the margin also that is required for such kind of loans against the deposits. But a urban cooperative bank is not allowed to give credit facility against the fixed deposit or term deposit of other banks. If credit facilities are extended to non-members against deposits, such lending must comply. First of all, lending cannot be done to the non-members, but there are certain rules and regulations under the Cooperative Societies Act that allow the lending to the non-members against the deposits. Okay, so credit facilities, if they are extended to the non-members against the deposits, such lending must comply with the provisions of the relevant Cooperative Societies Act. Urban Cooperative Bank can give unsecured loans. So this is important, that the Urban Cooperative Bank can give unsecured loans, that is loans without collateral, to a single borrower, but there are certain limits that are set. For tier 1, 5 lakh rupee is the limit on unsecured loans to a single borrower. Tier 2, 7.5 lakh rupees, and tier 3 and tier 4 10 lakh rupees. This is the limit on the loans of that are unsecured loans. Okay, any confusion? So this is it. Tenure of and moratorium of housing period, tier 1 and tier 2, the tenure can be up to 20 years, moratorium can be maximum for 24 months. Okay, and moratorium can be given only for the construction phase. This is it. Then tier 3 and tier 4 UCBs, they can decide their own moratorium, they can decide their own time period of the housing loan. Credit facilities against deposits can be given according to the board approved policy, but the credit facility cannot be given against the fixed deposit or term deposit of the other banks. Lending to non-members can happen, but according to certain relevant act only. Unsecured loans to single borrower, so if it is given, it should be according to the limits. For the tier 1, 5 lakh rupees, this is the limit for the single borrower unsecured loan. Tier 2 urban cooperative bank 7.5 lakh, and tier 3 and tier 4 10 lakh. This is the idea. Chalo. Now coming to the questions, this is the first question. Under the Urban Cooperative Banks Concentration Risk Management Amendment Directions 2026, which of the following statements regarding nominal members of a urban cooperative bank is or are correct? A nominal member is entitled to vote in the general meeting of the bank. Cooperative society registered under any law cannot be a nominal member. Nominal member may be enrolled for availing permitted credit facilities occasionally for a temporary period not exceeding 3 years. So which of the following statements is or are correct? That you have to tell me. Okay. The second question is regarding, consider the following statements regarding housing loans under the RBI Urban Cooperative Banks Credit Facilities Amendment Directions 2026. For tier 1 and tier 2 UCBs, maximum tenure of a housing loan including moratorium period is 20 years. Moratorium may also be granted for acquisition of completed houses. For tier 3 and tier 4 UCBs, tenure and the moratorium may be decided as per the board approved policy. So which of the statements given above is or are correct? That you have to tell. Okay, so this is it for today. Thank you everyone for joining the session, and I will provide you this PDF in the Telegram channel of EduTap. Like, the team will upload it in the Telegram channel within 24 hours. Okay, tomorrow is Sunday, so maybe by Monday you will get this PDF. Okay, and do give the answer of the homework question in the comment section below. Okay, so this is it. Thank you everyone. Thank you.